Hello, hope you're well. My name's Lee, I'm from MPG, and this is my weekly real estate market update. Today I want to talk about consumer confidence and what that means for us here in the property market. Because at the moment, the media is sort of hyping it up a bit like the market's really improving and we're seeing some more transactions come through and some more positive results. And that's certainly the reality, but sometimes the media has this ability to exaggerate exactly what's going on. So I want to put that into perspective this week. And the ANZ Roy Morgan Consumer Confidence Index this week has risen by 1.2 points. So that's good news. It shows that consumer confidence has risen, which is fantastic, but it's still below their set benchmark of 85 points and it's sitting at 82.2 points currently. And what they also acknowledged is that whilst the consumer confidence has improved by 1.2 points, the overall market state by state is very different. And we've actually seen that consumer confidence rise very heavily in Western Australia, with most other states staying fairly flat. So yes, consumer confidence is there. And this is probably off the back of the recent RBA decision to hold that cash rate. And that's giving a lot more people confidence now, because obviously they can see their mortgage repayments, they can see that they're going to be sitting there for a while now. For those on the buying front, they've got a little bit more certainty about what sort of affordability they can jump into. And it's likely that RBA cash rate isn't going to rise again this year. At least that's what the experts are telling us anyway. And most experts and the big banks as well are suggesting that there'll be a few rate declines later this year as well. So there might be 1 to 2 to 3 rate cuts later this year. Now, if that happens, then we'll see an improved consumer confidence, obviously. But right now, just because of the hold of the cash rate and this talk about a potential rate cut later in the year, buyers are starting to enter the market again. And that's certainly what we're experiencing in the property market. Some markets more heavily than others. Brisbane certainly, and I've reported on this in the last couple of weeks, is performing very well. On the Sunshine Coast, we're seeing more buyers coming out as well and some really strong sales still being achieved. But what the media tends to exaggerate on is those prices. And again, we experienced a huge boom of increased prices for properties across Australia in that 2020-2021 year period, where prices went up 50 to 60%. That's not what's happening right now. Most experts are predicting that we'll see prices rise by 5 to 7% this year, even with that rate cut potentially later in the year. So we will see a more moderate price gain over the next 12 to 24 months and not this booming market. So for property sellers, I think that's just important to acknowledge that prices aren't jumping like they did back in 2020 and 2021. And for buyers, equally, it means that, you know what, if you get into the market today, you're likely to make some positive gains over the next 12 to 24 months. And as I know personally dealing with many buyers, most buyers get into the market and they're in their house for at least 5 to 10 years. So it's a longer term strategy, and prices historically in Australia for property have always improved. What I do think we'll see later this year, yes, we'll see some positive gains in property prices continue, just on a more moderate sort of basis. But we will see less first home buyers coming into the market and probably less first time investors coming into the market as well. I think just because of the costs of living, that reduces affordability and borrowing capacity, and many people won't want to take on that risk. So I think we'll see less of those buyers entering the market. We will see a lot of property owners, existing property owners, transacting in this market. There will be a mix of people downsizing, a lot of that happening in the local area at the moment that I'm seeing, people downsizing, opening new opportunities for buyers to come in and upsize as well. So there'll be that downsizing, upsizing transactions happening in the area as well. And what I'm seeing a lot of right now is people migrating as well. So they're selling in perhaps markets with higher property prices and moving to areas that maybe are quieter, more suited for their new lifestyle, but also for that affordability piece so they can reduce their debt, or maybe reduce their debt altogether and still have a property debt free. So I'm seeing a lot of that migration happening as well, and I expect I'll see that to continue this year. Guys, if you're interested in knowing what the equity is in your property, whether you bought a couple of years ago, 5 years ago, 10 years ago, give us a call. We'd love to pop out and see you. It's a complimentary evaluation process that we run through, and we provide you a full property price report or equity report for your property as well. So give us a call, click the link below if you're interested, and we'll come out and see you. Other than that, have a great day. Thanks for listening in today, and we'll talk to you soon.